Hi, it's John Godden from Morgan Stanley with our Friday FAQs. The focus is again on upcoming earnings season, so I wanted to go through our preview thoughts for airlines. The punchline is we believe that summer volatility will be a long-term buying opportunity. Historically, the summer trading period has been volatile for the group, something that will likely play out again this summer, given early evidence of decelerating PRASM growth trends on a combination of tougher comps, shorter-term international headwinds in each major region, including Asia-Pacific softness, World Cup volatility in Latin America, and a slight but negative read from weak European carrier guidance revisions. But strong domestic trends and falling fuel prices set a much lower hurdle for PRASM growth, driving earnings beats going forward. And we expect positive EPS revisions to ultimately drive the stocks higher from here. In fact, we're above consensus on both the third quarter and 2015 on most airlines. We highlight three stock themes in the report, but check out the slides for all the detail. First, international exposure is a risk, but offset by falling fuel. Though international capacity growth may pressure yields across the network carriers, we believe this concern is somewhat temporary and offset by domestic strength and falling fuel. So we want to own super majors, American, Delta, and United, despite their international exposure. Second, competitive capacity pressures are a risk for some. While we expect Alaska to beat on stale consensus, competitive capacity growth is likely to continue to pressure PRASM through year-end. In addition, we believe increased competitive capacity in the Caribbean might weigh on JetBlue's results. Third, conservative guidance in earnings beats. Allegiant, Hawaiian, Southwest, and Spirit Airlines are all domestically focused airlines that have a history of beating guidance, and we expect this to play out again this quarter. Further amplifying our long-term bullishness is the fact that our stronger for longer view on the cycle remains very much intact. Specifically, we're believers in a peak no sooner than 2016. Given how volatile the U.S. airline industry has been over the last 15 years, 9/11, SARS, financial crisis, investors often forget that the typical airline cycle is actually quite long in itself. In fact, in the 80s, the industry generated 7 years of consecutive operating profits, and in the 90s, the industry did 8 years of consecutive profits. Global airline profitability cycles have also approximated these lengths. So the cycle actually wouldn't be very stronger for longer at all if there wasn't at least 8 years of upcycle. And that date math would suggest a 2016 peak at the earliest. If true, this outcome would drive significantly more upside in shares, considering that in a recent question of the week, about 1/3 of investors see a peak before 2016. And there's a strong case to be made for a peak beyond 2017. After all, we are experiencing the most disciplined cyclical capacity rebound since deregulation amid the most concentrated industry structure in the industry's history. Simplistically, if macro is reasonably cooperative, it should then come as no surprise that the industry will see new peak margins, a view underpinning our above consensus estimates for overweights American, Delta, Spirit, and United in 2015. I'll leave it there, but feel free to reach out. Again, it's John Godden on the airlines.